What a massive crash that we received on Friday, guys. This market has been a bloodbath. Wow. I mean, Dow down 630 points, massive sell-off across the board. Markets diving on Friday after a decent jobs report. That just tells me it doesn't matter. They're talking about the jobs report being good, but that's saying that the Fed still needs to raise interest rates. That signaled investors to sell off. I say phooey. I think it's because anytime in a bear market you get big upside, which we had on Wednesday and Thursday, big move up, people are just selling into strength. That's all it is. People are taking advantage of that rally. So let's just look at the markets on Friday. A massive drop in the S&P 500, almost down 3%, 2% on the diamonds. Almost 4% drop on NASDAQ, guys. Insane drop. Almost 3% on the Russell's 2000. Financials down 2.4%. Gold down 1%, almost 3% on silver. US dollar higher. VIX only down 2.7%. Guys, if the markets are down 3%, you should have triple that on the inverse on the VIX to fear. We should have been up at least 9% today. We didn't see that. We saw 2.7, saying the fear isn't that much. Anytime you have the markets as a whole dropping 1% in a single day, that's bad. 2% in a day, that is like, whoa. 3% is crazy. You don't see that very often. We saw it on Friday. I'm doing this video right after the market close, and it's insane. And all the talking heads right now are saying, hey guys, it's had a good jobs report, but we think the Fed's just going to be raising interest rates, and that's why the market's dropped. I'm telling you guys, anytime you have this much upside, we had a big pop. We had the falling wedge going. Tight falling wedges. Last video, if you didn't watch it, go watch it. Tight falling wedges. Trajectory straight down. You guys commenting in the comments, thank you. I read them all. You guys were giving me your what angles that those were coming out at. I love that. Let's get techie. It had a high probability of a big pop. We got that big pop. Boom, right up to the upside. And now the question is, what do you do when you have that much pop? You sell into it. You got some of your money back, or you're just looking for more profits to the downside, and that's what we have. But I have something to talk about here. Look at the daily charts here. We're in a downtrend. We have lower swing highs, lower swing lows, just in a nice downtrend. This trend line was down much tighter. We got the pop. Now that we popped, I've moved this trend line to the upside. Capital really coming in and grabbing a hold of all that that price action. So encapsulating is one word that we use for diamond. Same thing. Down. Lower swing highs, lower swing lows in a nice downtrend. Heading down. We're just heading down. NASDAQ. Big downtrend. Down. We're at resistance and we're heading down. We're coming to these support levels. Okay, we're at these support levels of previous swing lows. But not here on the Russell's 2000. We're up. We're not even near the lows, not yet. But definitely heading down that way. And the volume, guys, is suspect, meaning that this drop on the daily, if I go back to the NASDAQ, it's barely at the average volume. So really just lackluster volume on the markets with a low VIX. That's telling me this was a sell-off that doesn't have a lot of conviction behind it, frankly. No conviction to speak of. The question now is, will we have follow-through? Guys, I'm going to go to the financials and look at that. We're down. We dropped. A lot of support right down here. Lots of support coming up, guys. Gold daily pulled down to this trend line. It's really good support. Let's see if we can bounce up from there. Silver. It had this massive, we had these triangles, guys. I talked about them. Look for a big explosion to the upside. Boom, up, and then down. Now it's kind of almost like a pennant. As long as it stays above these moving averages, good buy opportunity, or maybe we could drift down to this trend line and then get a bounce to the upside. Let's see what happens. US dollar, just what we needed. So if we started coming down, look for a big move in the markets, and that's precisely what we got. We come down here, these two trend lines, boom, bounced right off of them, heading up. The cool question is, can we get back to these highs? Maybe, maybe not. This could turn into kind of an elongated head and shoulder trend reversal pattern. The VIX, big triangle, Thursday, Friday did rally higher, but it's just lackluster compared to the massive drop we got in today's market. So very, very interesting. I think we can get a little hit on, an idea of what we can expect looking at the weekly charts. So let's take a look at the weekly charts. We're going to go to the spiders. I do have candlesticks instead of lines on this one because of the candlestick reversal patterns. They are meaningful at this moment. So this is the spiders S&P 500. We had a symmetrical triangle. We broke down on this a couple weeks ago. And now this week we rallied higher, but people sold into it. We come right back down on Friday. So what type in the comments down below is this reversal pattern? You arguably have two types of reversal patterns here. Tell me in the comments down below what type of weekly reversal pattern we see on the spider. And because we do, and we have the rising 20-day moving average. Or no. This is the 200, big 200, big red, finding support. We're bouncing up off of big red on the weekly, and so if this is going to be a bullish reversal pattern, it would make sense on the drop that there wasn't a lot of conviction, and sure enough, we did not have that. Look at the MACD. Let's zoom in on this, really zoom in. Down, 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 down. But look what's happening to the MACD and the signal line. They're getting ready to cross over. If it crosses over, that means we should be finding a bottom, right? So we could be crossing over there. The RSI 10 is hooking upward. Do you guys see that? It's a hooking upward, heading higher. This could be a bottom. It could rally back up. I think that we'll find resistance at this trend line. I'm not sure we could break up through it. If it does break up through it, this would be a death hook and look for a major rally to the upside. I'm not convinced that the markets have that sort of strength in it. So we'll watch that. The diamonds, weekly chart. Same thing. Look at this. What type of reversal pattern is this? Look at the MACD. Look at the RSI. NASDAQ, the Qs. Here we are, here we are, here we are. Do you guys see it? Do you guys see it? Weekly. This one's already came up. We have a higher high, higher low. This is a pivot candle for you mentor students, the Groth graduates who are the 301 students and the 401 students. All you guys who are watching through the 401s or who are watching as Groth graduates, you guys know what I'm talking about on the pivot candle. So there it is, financials. You look here, pivot candle, and very interesting. So symmetrical triangle breakdown on financials and it rallies up to resistance. They sold into that resistance, heading back down. Gold, drop it, pop into a ton of resistance and moving averages. And silver has a breakout above two major trend lines, guys. Goes up, and then comes back down, finding support at this major trend line. If I get to a line chart, you'll see this. This line's been here for some time now, and now it's staying above that line, which is really good to see, right? Very, very good to see. U.S. dollar weekly chart staying relatively strong. Went down, then rallied back up, trying to build a high base. And then the VIX for the week this is very important that you guys see this. The VIX is at a major area of resistance. So if I go here and go to a line chart, it'll be a little easier for you to see. But if you look at resistance, it's hooking right here at resistance. You guys see that? So it's saying that it has a better chance of dropping, getting back down into this apex of this symmetrical triangle. If we go back here to a candlestick chart, you will see that we tried to break over it Thursday or last week and then this week, but it since closed down below. So this area could be resistance and drop. That means fear will be dropping. Markets will be going up if that happens. So if fear drops lower and the dollar also drops lower, look for the markets to rally going into next week. There's a good chance of seeing that happen. Guys, if you have not registered or subscribed, if you like this level of education, fantastic. If not, I understand. There's a lot of young whippersnappers out there that don't have 20 plus years of trading experience that you can follow. And I'm an institutional trader. I own a hedge fund. Actually, 2 hedge funds going on 3. Be a cryptocurrency hedge fund coming up next. So I do own those, and In Tampa, right now, I was forced to evacuate Florida because of the Hurricane Ian, and now we are back. We're heading back. We were clear, but Fort Myers and Sanibel Island got destroyed. I mean, our prayers are still with all of them. Last I heard, there was well over 100 individuals who have lost their lives in that hurricane. Came in at a 4, Category 4. It hit at Category 4, but it was almost a 5, 2 miles per hour, less than a 5. And listen, something very exciting. If you want to get in on the news on this early, go to Grok Trade. You see Grok Trade somewhere. Go to Grok Trade. Go to Algo. If you go to Algo, I did a live meeting with a group of individuals talking about algorithms that I have developed that gives buy and sell signals. And if you want to know all about them and to get a glimpse of them and how you can get in on this, we won't be ready for another 2 weeks or so. But you can get a head start by checking out that website, groktrade.com/algo, and watch the video. It's long, okay? You may have to scrub through some of it, but it's all pertinent. If you go through it all, you will be highly informed. Just think to yourself, if you were going to a movie, it'd be about 2 hours, right? Well, this one, it's 2 hours, but it's packed full of data. If you're a data person and you like statistics, this will tickle your fancy. It will scratch that itch, I promise you. And you will see the power of these new tools that we're doing. We're upping our game here at Grok Trade. We're going into crypto while we're in this winter, while it's way down. This is when this starts to rally again, we're going to be ready for this. But the algorithms that we have can be used for stock and crypto, intraday and swing trading. I mean, we are jazzed about what we're getting ready to release. So anyway, there you go. Hope you guys are well. I'll be traveling. Mark's coming back from Italy. He had a fantastic, he was sending me pictures and all, and had a great vacation. So he'll be back in the pocket this coming up week. For those in the chat room, you guys may not know this, but we have a free chat room, day trading chat room. If you're a day trader, we used to charge, what was it, $150 a month, 175, something like that, a month for this. And we said, let's just make it free. Made it free. If you're a day trader or interested in day trading, go to Grok Trade and go to, what do we call it? The Grok chatting, chat room. It's day trading from 9 a.m., 9:30 to Eastern Standard Time to about 11:30 Eastern Standard Time. Very active, have fun. And paper trade, if you're gonna do it, paper trade for a while until you get your footing. And because these are big boys. This is run by Grok graduates. These guys are they're animals out there in the stock market, and you want to be trading with them, not against them. I promise you that. And if you want to jump in and be mentored by us, both Mark and myself, we have that availability. You can check that out too. Catch you all later. We'll see you. Bye.